Hello viewers, so welcome to my channel. I'm Hasham. This is the last and final video on theory of computing the income from house property. Last three videos I have completely explained different provisions of Income Tax Act regarding the computation of income from house property. And this is the final video. Next video onwards we'll start the problems. Now still some more points you have to remember, because these points are very important. Without understanding this, we cannot go for the problem. So all the problems are completely based on the provisions which I am explaining in these four videos. So take a screenshot of the points which I have written, then I'll explain each and every point. Now, I'm going to explain you about self-occupied house. Different types of situations are there. Different types of problems are there regarding self-occupied house, not let out. So what are the different situations? The first situation, occupying one or two houses. One house or two houses as self-occupied for residential purpose throughout the previous year. If the SSC is occupying one house for his own residential purpose throughout the previous year, or the SSC occupies two residential houses for his own self-occupancy throughout the previous year, then what is the provision? Income Tax Act says when the SSC has occupied one or two houses for his own residential purpose, both the GAV and NAV will be nil. First point, the NAV and GAV of both the houses will be taken as nil because both the houses are treated as self-occupied, right? The exemption is applicable for two houses to an individual and HUF. Earlier, 3 years back, 2-3 years back, only one house exemption was given. A person can have only one residential house as self-occupied, but now the law has changed. Now Income Tax Act says a person can keep two houses for self-occupancy, for individual as well as HUF. Now deduction under section 24B in respect of loan taken to purchase, construct or repair or reconstruct will be restricted up to rupees 30,000 or 2 lakh in aggregate for up to two houses. Exemption will not be given separately for both the houses. The aggregate deduction will be given 30,000 or 2 lakh. When 30,000, if the loan is taken for purchase or construction below 1/4/1999, then 30,000 is the limit. If the loan is taken after 1/4/1999 for the purpose of purchase or construction, the limit is 2 lakh. Limit is 2 lakh. And the loan is taken for repair or renovation or reconstruction, the limit is 30,000 only. Whether loan is taken before 1/4/1999 or after 1/4/1999. These are the provisions. If an SSC is occupying one or two houses, at the most maximum two houses he can keep as self-occupancy. In that case, the NAV will be nil. The deduction will not be allowed except one deduction, that is interest on loan, and that too, the aggregate limit is 30,000 and 2 lakh. That's it. Now, occupying more than two houses are self-occupied for residential purpose throughout the previous year. What will happen if an SSC occupies more than two houses? More than two houses means three or more than three. Suppose if a person is occupying three houses as self-occupied, he has not let out. He is keeping three houses as self-occupied. Income Tax Act says, according to the choice of the SSC, he can choose any two houses as self-occupied, and the third house will be treated as deemed to be let out. So we have to compute what is the income of this third house, which is actually not let out, but deemed to be let out, as if it is let out. So two houses can be treated as self-occupied, the third house can be treated as deemed to be let out. All these things we are going to cover up in the next video problems. So if you listen, watch this video carefully, automatically you will get in mind while doing the problem what are the provisions of law. Next comes self-occupied house. During the previous year, part of the period is let out and the part of the period is self-occupied. That means a single house is there. During the last previous year, 6 months he has used for self-occupancy and the remaining 6 months let out. Part of the period is self-occupied and part of the period is let out. Then how to compute the income from property? The law says the treatment to compute income from in this situation is as follows. First of all, the period of self-occupancy is to be ignored completely. That is, income from house property is to be calculated as the house is let out for the whole year. First point, ignore the self-occupancy period. Example, if last previous year 12 months, out of 12 months, 3 months self-occupied, 9 months let out. So Income Tax Act says treat as if the house was let out throughout the previous year 12 months. Ignore the period of self-occupancy. Don't consider the period of self-occupancy. Assume that the house was let out throughout the previous year. That is the first. Second, for the self-occupied period, income is not at all to be computed. No need to compute the period, self-occupancy period. In 12 months previous year, 3 months self-occupied, 9 months let out. Though the 3 month, we are not going to compute income because 3 months is self-occupied. Treat as if the house was let out throughout the year. Municipal taxes paid and interest on loan taken are to be deducted fully. Whatever municipal taxes paid or interest on loan paid, fully deducted. Don't think that we have to take only let out period. No, completely for 12 months, give the deduction for municipal taxes and give the deduction for interest on loan. So these are the points you have to remember. If the house is self-occupied for part of the period and part of the period let out during the previous year. Next, building consists of independent living units or floors or flats during the previous year. If part of the house is self-occupied and remaining part is let out. Suppose a big building is there. In that big building, part of the building is self-occupied and part of the building is let out. One unit is self-occupied, the other unit is let out for one building only. Building is only one, but in that partition is there. Parts are there. One part is for self-occupied, the other part unit is for let out. In that case, how to compute the income from house property? In such a situation, 2 income statements are to be prepared because the complete building is divided into 2 units. One unit self-occupied, the other unit let out. In that case, you have to prepare 2 income statements. One statement for income of self-occupied, the other statement for income for let out. So, for self-occupied part, for let out. Joint expense are to be apportioned as per the instruction given in the problem. Some joint expenses are there. That means, for example, municipal taxes. Municipal taxes for the complete building are paid. Now we have to apportion the municipal taxes between self-occupied and let out. So according to the instructions given in the problem, we have to divide municipal taxes. If the problem is silent, then we have to see how much is the area. If equal area is there for self-occupied house or self-occupied unit and let out unit, then divide it equally. So according to area occupied, we can divide the joint expenses. Similarly, interest on loan also same thing. When interest on loan is there, actually municipal taxes will not be allowed for self-occupied period. Only interest on loan will be allowed. Interest on loan is a common expenditure. So interest on loan, we have to see how much area is there for self-occupied, how much area for let out. Accordingly, interest on loan. Municipal taxes will not be allowed as deduction for self-occupied. It will be allowed only for let out portion. Then next one, 5th one. Self-occupied house vacant due to employment or business, etc. Sometimes an SSC will be transferred from one place to another place. Presently, at place X, the SSC is having his house. Now he is transferred to the place Y. Due to the transfer from X to Y, the SSC has kept his house vacant throughout the previous year. He has not derived any benefit. There at the other place, he is living in a rented house. On account of transfer or account of business, he has moved from one place to another place. In the other place, he is living in a rented house. And his original house was vacant throughout the year. Income Tax Act says that vacant house, no income will be calculated. The NAV of the vacant house will be nil. No deductions are allowed except one deduction, that is interest on loan taken for purchase or construction or repair or reconstruction or renovation. Then accordingly the ceiling limit is there, that is 30,000 or 2 lakh. Right? So this is the provision regarding self-occupied vacant due to employment or business. The last point to be discussed here is self-occupied house using for running own business or carrying on own profession. Sometimes an SSC is having a own property and that own property is used for running his own business. The SSC is running his own business in his own property or carrying on his profession in his own property. Then Income Tax Act says don't calculate the income from such property. From such property, because property is used for running the business. In that case, whatever expenditure incurred on the property like municipal taxes or repairs or insurance of the property, that will be treated as business expenditure. So while computing income from business, the expenditure incurred on the property will also be allowed as deduction. Because the property is used for running his own business or profession. That's it. So these are the provisions regarding computation of income from house property. Last 4 videos I have applied my maximum effort to explain you about the provisions of Income Tax Act. So if you are thorough on these provisions, you don't find any difficulty while doing the problems. Otherwise, if you directly go to the problems will be very, very difficult for you. Inshallah, in the next video, we'll start the problems on computation of income from house property.